and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the festive season special edition. Here's wishing all our viewers a very happy and prosperous Dhanteras and Diwali and the upcoming New Year as well. We hope that with Business Today Television, the time that you have spent learning about markets and speaking to top market masters, you've actually able to get onto the positive trajectory of investments. You've been able to start off that, and this is the best time to really revisit your portfolios to see whether you're going right and what can you do better for the upcoming new Samvat as well. And this is why we found out two of the best personal finance experts in India to really help you with your personal finance journey this festive season. Let me welcome on stage and on this show our guests on this panel. We have Mr. Pankaj Mathpal. He's the founder and the managing director of Optima Money Managers, and we're also joined by Pooja Bhinde. She's the certified financial planner of PB Investments. Warm welcome to both of you, and thank you so much for taking the time out. And here's wishing you both a very, very happy and prosperous Dhanteras and Diwali. Let me start off by asking you, Mr. Pankaj Mathpal, you've been a seasoned financial planner. We've been seeing so many years that you've been guiding so many of your followers, your clients, the viewers, across platforms, and how you've been guiding them to really get onto this wealth creation journey. Tell me, how is this festive season really different from all the festive seasons that you have seen so far? And what are the key learnings that one has to learn from you, the top personal finance expert of India?
Thank you very much, Sakshi. Happy Diwali to you. Happy Diwali to Pooja and all our viewers. See, first thing, we have seen a good rally in the market. Investors made good money in the market. But immediately before this festive season, we have seen some volatility in the market. That is another thing. So the learning is that you have to have patience when you invest in the market. That is one thing. Second thing is, you should maintain asset allocation because you cannot be dependent only one asset class. Every asset class has its own importance in the investment portfolio. And one important thing is that one should understand their risk appetite, investment horizon, and financial goals. And according to their financial plan, they should maintain the asset allocation in their portfolio.
Right. So, Mr. Mathpal, there are a lot of investors who've jumped on the bandwagon of the investment journey over the last few years, especially after COVID. They have been just 3-4 years into the investment journey. Many of them have opened first-time demat accounts. Many of them have started doing SIPs for the first time. Some have also started doing stock markets as well for the first time as well. And this is the time that they're actually seeing that stock markets are falling like 9 pins for the first time too. So, they are also getting very nervous. They're not sure of how to handle or look at their portfolios which have turned red completely. What would you advise the average retail investor who's looking at this volatile time for the first time?
Correct. Sakshi, see what happened during COVID, because everybody had plenty of time in their hands and they were best utilizing it. So that is why many investors first time they opened their demat account and started investing. And fortunately, market has rewarded these investors, though they were the first time investors, but they made money. Only thing is that they did not do much research because markets were performing and they were thinking that they are the good investors. Now, immediately, as I mentioned now some time back, that immediately before this festive season, we have experienced a good correction in the market. Investors have to understand that this is the nature of market. See, equity market will never perform one-sided. This volatility is the nature of equity market. If you invested considering the rally in the market, for example, we have seen that many investors invested only in PSU stocks or defense stocks or in these funds, and they have seen the more fall in these categories compared to the broader market. Now, they have to understand, one, that they took a wrong decision. If you are investing only in a particular sector or in particular theme, then you have to understand the entry time and exit time. And now, anyway, if you have made a wrong decision also, thing is that how to correct your portfolio. You should invest in diversified funds. More allocation should always be in diversified. Some allocation can be in these thematic funds, sectoral funds, but for that, you have to understand the right theme for the right time. It's not that because you have seen the returns in the recent past and that is why you're following that theme. You have to see this theme has potential to deliver better returns going forward. So forward looking should be your idea, not the past return should be the
Correct.
thing that you should depend on. So now see your portfolio, see your goals, accordingly choose the right funds in your portfolio. And as mentioned, theme can be one choice, but that should be as a part of portfolio. Major allocation should always be in the diversified fund. So maybe that if you have taken some wrong decision, some incorrect decision, it's a time to rebalance your portfolio now.
Absolutely. So those are very, very key points. If you are somebody who actually identifies yourself by actually looking at or hearing a lot of things in social media, and you invested in only one particular area and you exposed your portfolio to all the risks right there, then what is absolutely the correct thing for you to really look at is how do you get into diversification. Don't put all your eggs in one basket so that you minimize the risks on your investments as well. Let's now welcome Pooja Bhinde. She's now with us on the show. Warm welcome, Pooja, and season's greetings to you. A very happy and prosperous Diwali to you, to your team members, and also to your family members at large as well. Tell me, like all the viewers must be interested to know from you, where is it that they should be investing in this festive season?
Having me on the show, Sakshi. Wish you a very happy Diwali and prosperous New Year to Pankaj ji, also to all the viewers here.
Okay, I think there is some kind of a technical glitch. We'll again try and get back to Pooja. But in the meanwhile, let's continue our discussion with Pankaj ji. And I want to understand from you one thing, just like how I was asking Pooja also. This is the time when a lot of purchases happen. Consumers go out there, they shop their heart a lot. But at the same time, where should they really be investing their money this festive season? Gold and silver are at their peak, stock markets are at bottom at this point in time. They are completely confused as to what should they be doing with their money. What would you advise them?
Sakshi, you have asked a very good question. See, it's a very good time to do the shopping. And it's a festival, so we must enjoy and do our shoppings. No, nothing wrong in that. But you have to understand, as there is sale in the market, there's sale in the equity market as well.
That's true.
And if you want to invest in equity market, this is the best time because the stocks or the mutual funds NAV has come down. So if you are a new investor, you want to build a portfolio or you want to increase your allocation, I'll say that this is the best time, make best use of it. So enjoy the festival. And if I talk about this asset allocation, see, in a portfolio, all the asset classes have their importance. So equity, we know, is a nature of the equity market is volatility. But in long term, we know that equity is the asset class which has potential to deliver best returns among all the asset classes. So you must invest in equity. Along with that, that is also one good asset class at this point of time because as we are expecting rate cut going forward, so you can even include debt in your portfolio. You can increase allocation. Gold, we have seen a good rally, but still in India, we know that we have liking for gold. And gold has also been able to deliver inflation beating returns. So gold as well as silver. So in your portfolio, you should have equity, debt, gold, silver, everything. But yes, the allocation will depend on many factors. For example, if you want to invest for long term, your horizon is something more than 5 years. So your equity allocation should be higher, especially if you're planning for retirement, you're planning for children education 10, 15 years later from now. In that case, you can have 70% allocation in equity, some say 30% in debt, some 10-15% allocation can be in gold and silver.
Correct.
But if you are an investor, you are investing for short term, say for 4-5 years, in that case, your equity, debt, and this gold allocation can be a little different. Your allocation can be in equity, say 30-40%, equally in debt, some 10-15% in gold as well. So allocation can be different based on the different financial goals and investment horizon. But asset allocation is the most important thing in financial planning.
Absolutely. So there you know that you must definitely have exposure to equity, to debt, to gold and silver. But how much you need to allocate will depend on all the factors that Pankaj has just highlighted. We have Pooja back with us. Pooja, I was asking the same question to Pankaj that I posed to you. That where do you think investors should put in their money right now? Do you also agree with Pankaj that equities, despite all this fall, probably are giving you a good opportunity to take advantage of the fall?
Yes, certainly, Sakshi. I would say the point that I was trying to make here is the asset class allocation obviously will always, anytime it will depend as per, the goal, the time horizon, the risk appetite, the age. These are going to be the factors time and again. It is never going to change as per the market volatility. But yes, many a times investors do, because of the, peer pressure, herd mentality, or because of the trend, because of so much of social media information about, like we've seen defense sector or, a hardcore sectoral, inflow in the, the past 6 months that we've seen so many sectoral inflows. And at the same time, right now, allocation towards the commodities because of the, demand we are seeing here. So time and again, investors need to be reminded by medium of such, forums wherein, financial planning has to be the core. Come what may, come what the trend may be, but your asset allocation has to depend as per, the time horizon and stuff. If you see somewhat 2080 to 2081, like, right now what we are talking about, the 1 year horizon, if you see any market, whether it is equity or debt or, gold or silver for that matter that we are seeing today, more than 20% return everywhere, so it has been a good year. And coming forward, obviously, right now in the near future, we are seeing a little bit of volatility, but that volatility is good for equities, for SIP inflows. Like if you see SIP inflow last year, Sakshi was just 16,000 crores, and
Yes.
today we are looking at approximately 25,000 crores. So it's a 50% increase just because equities and mutual fund SIPs are like, something like as Pankaj mentioned, like one mandate in the portfolio, I would say, wherein for long term this has to form the portfolio the equity portion in your portfolio. Also, one point here I would like to make here in financial planning, whenever we talk about goals and investments, obviously, depending on the time horizon, it's like equity for long term, short term, mid term, go for balanced portfolio, hybrid, and, make a contingency fund. But this time I would like to make something, make a statement on whenever you're planning SIPs or whenever do you, review your SIPs, do a step up SIP. Step up will do wonders. Like if I give an example, Sakshi, for 10,000 rupee SIP in 30 years for a retirement can make 7 crore. If you do a
Okay.
step up of percent annually, it will, create approximately 15 crores. So,
Let's get that again. Let's get that again for all our viewers to really understand that better. So viewers, what Pooja is trying to tell you is that in case you have started on with your SIPs, every year you should increase the amount of SIP that you do monthly in your mutual funds by some amount. Say every year you get a higher salary, you get appraisals. So all that additional money also needs to go into higher deployment for your mutual funds. That can create a whole lot of difference for the ultimate corpus that you create. So Pooja, could you give that example again? What is the basic
yeah.
SIP that you have taken per month, and what is it that you want to increase it by, and after how much tenure, what can be the difference?
See, Sakshi, normally for a 30-year horizon, we are planning for a retirement or a long-term goal. And a
Correct.
diversified equity fund, you can pick up any diversified equity fund for that. A 10,000 rupee monthly SIP, okay, But the step up is an annual step up. Like there is a step up option which is 10% or 15% or 20%, but a decent 10% step up is okay. So that is an annual step up. Either you do while you're booking a new SIP, or in your existing SIP also you can have a step up option, that is
Okay.
available.
Okay.
Do a 10% step up. So automatically how the SIP gets debited every month, once that 1 year is completed, it will, from next year it will be 10% higher. The coming year it will be 10% higher. So every
Correct.
year it will follow a 10% step up, and by the end of the 30th year, or whenever is the goal that you want the amount, it will obviously have a marginal difference than what your ongoing SIP will be, giving you returns.
Okay, so there you have it, viewers. Both our experts have advocated for mutual funds, a diversified fund that you should be looking at. Pooja has given that idea that in case you've already started off, then look at step up. In case you haven't, then look at it now, because over a 30-year horizon, what your current, if you would continue to remain at a 10,000 rupee per month, the corpus will be A, but if you look at a step up every year by 10%, then your investment is also bigger, but your returns are much bigger that you can even fathom. Let me come back to Pankaj ji. Pankaj ji, like we were discussing, that all the assets are important for a portfolio. Mutual fund is important, which you both have highlighted. Diversified fund is the best way to go forward to, rather than limiting oneself to one sector. Then you said gold and silver are also important. Now, why I want to talk about gold and silver is because they are both at record high levels. Even the stock market, even the analysts, the commodity analysts are not able to understand how their next year end target has been achieved in just few months on gold and silver. That is the kind of move that we have already seen. If at these record high levels, should one invest in gold and silver? One. And what is the best way to invest in gold and silver so that our returns are maximized and our risks are minimized?
See, Sakshi, it's difficult to time the market. So if I say that gold is at the all-time high, but this is said every time, is whenever we see the peak, we always say that now we don't know that what will be the next target. But if you are investing for long term, you should not worry about that. Invest whenever you have money, whenever you decide. Second best choice is investing through staggered manner. So like Pooja was explaining the importance of SIP, you can do SIP in gold as well. So you have choice of gold mutual funds, you have gold ETF, as well as there are sovereign gold bonds, if not the new issue, but you can invest in invest in the secondary market, means in the
Yes.
existing gold bond, you can invest in those bonds. So, gold, silver can be a part of a portfolio, must be a part of a portfolio. Now, which one will be the best choice for you? See, if you want to invest in staggered manner, you want to make gold and silver a part of your SIP portfolio, I'll say that mutual fund is a good choice. We have silver fund of funds, we have gold saving funds, as well as there are funds where you can invest in gold and silver through a single fund. So you can decide it and do SIP in a gold and silver fund. Second thing, if you have some lump sum amount available right now, so in that case, though in gold mutual fund you can invest, but you also can invest in gold ETF. So gold exchange traded fund, because at real time basis you can buy it. So you can invest in that a lump sum amount, and whenever you want to top up, you can do that. Apart from that, as I mentioned, that sovereign gold bonds can be purchased from the secondary market. Old issues are there which can be purchased, and we know that sovereign gold bond, the best thing is, one, you get interest on that over and above the gold appreciation. Apart from that, because on maturity as well as on redemption, you don't need to pay any tax. It's a tax free. So that makes it little better compared to other options. But yes, if you ask me physical gold, I'll say that jewelry you buy only for consumption purpose. Otherwise, neither jewelry nor the physical gold. You have financial gold. I mean that gold ETF, gold mutual funds, or sovereign gold bonds. Invest in these instruments.
Okay, Pankaj ji, silver is the one which has outperformed even gold and other asset classes by a wide margin. Do you expect investors to continue to focus more on silver rather than gold also? Between the two, if one has to choose, should one go for silver? Do you think higher allocation should be made on silver, keeping in mind that the growing sectors of electric vehicles, of solar panels, and also maybe healthcare space, semiconductors, these are the growing industries in India as well as globally. The demand for silver will be much higher than gold?
See, I agree with you. See, gold is used as a has a ornamental value, whereas silver has is ornamental plus industrial value. Moreover, if you talk about silverware, India has a highest consumption, but silver is very volatile compared to gold. It is more volatile. So if you have a risk appetite, you can definitely include in your portfolio. Otherwise, we have seen that gold, means in India, everybody has liking for gold, and it has lesser volatility compared to silver. So first preference should be given to gold, but investors who have better risk appetite, they can definitely consider silver in their portfolio.
Okay. Pooja, let me come to you now. A lot of viewers must be wondering that if I have to start investing in a portfolio now, from this festive season, I have to do that Shubh Shuruaat of my investments. Then, of course, you have talked about various places that one should be investing in. But which of the asset classes, according to you, will actually outperform, and what should be the approach of investors from this Samvat to next Samvat? Where can one look at good returns, but also safely one can invest in?
Sakshi, I would always say that, whoever the investor is, whether a new investor or an existing investor, whether a young investor or someone who is nearing retirement, you just need to see that if your time horizon is more than 5 years, without any, second thought, please invest into equity funds. You can choose that, diversified equity fund, flexi cap funds, multi cap funds. They are fabulous funds. If you're a young
Okay.
investor, you can get into mid cap and small cap. Obviously, SIP is something I would always say, but if there is a lump sum in your hand, you can use STP, which is systematic transfer plan, for next 6 months to 12 months because of the volatility that we are seeing. Now, if there is something for a less than 5 year kind of a horizon, and a lump sum amount, and a conservative investor, and someone who is like having a retirement corpus and wants to put a SWP, which is a withdrawal
Right.
plan, do opt for a hybrid fund, a balanced category fund. A very wonderful, statistics said that Sakshi, that the asset allocation is something, if you have an advisor, or if you can't do it
Sure.
yourself,
Sure.
they help you, such mediums help you, wherein how much should be in equity, debt, gold, or whatever. But there is something called as multi-asset allocation category that we have in mutual funds, which wherein there are minimum three asset classes in the proportion of 10% that needs to be there in the portfolio. So
Okay.
majorly it's equity, debt, and gold. So you see equity, debt, and gold are the three major asset classes. And if you see 10% minimum, so 30% is allocated to them. And the remaining 70% will be majorly equity, arbitrage, bonds. Then there is gold, there is silver, there is some REITs, there is some foreign equity as well. But
Okay.
today, the statistic shows that all these multi-asset allocation funds are having not more than 50% in equity. It's at 40%, 45%, that's it. But if you see the returns of past 3 years, they are double-digit returns. So I would say somebody who does not want to have 100% equity portfolio and still is expecting a double-digit return, which is beating your inflation, and can't do the asset allocation on your own, then please, you can, opt for a multi-asset allocation fund. They are wonderful in the category. They are doing really great. And, because of the gold, silver hike, we can see the returns in the portfolio itself. So according to
Okay.
me, the one category which, the investor should look at apart from 100% equity portfolio. Yeah.
Okay, so sensible advice right there. Of course, you have to speak to your fundamental and financial expert really to see what is your financial goal, how long a time horizon are you planning to give to your portfolio that you create today. All of these are key factors. But in case you are starting off with absolutely no knowledge and you really want the benefit of diversification across asset classes. Multi-asset allocation funds is something that you should be looking at, where you can get the benefit of equities, that's stock markets, debt, that's various forms of fixed income providing asset classes, also then gold, silver, and REITs also, which is a digital form of investing and getting an exposure to real estate as well, viewers. So that's something that you can definitely find out about. Let's get back to Pankaj ji and understand from a simple case basis so that most of our viewers can benefit from it, Pankaj ji. Say for instance, today there is a 30-year-old or a 35-year-old who wants to start investing in this festive season, has a lump sum amount of 10 lakh rupees to now start off a well diversified portfolio. How would you deploy the assets, in which all asset classes, in what percentage, to create a wonderful portfolio that can actually reap great benefits going forward?
See, only one information you have shared, that the person is 30 years old. But second most important thing is that how long the person wants to stay invested. So
Yeah.
investment horizon is very important to know here. But now let's understand different scenarios. For example, somebody 30 years of age wants to invest for 20, 30 years for the retirement financial goal or something like this. In this case, my advice will be that your investment should be more into equity. At this point of time, if you invest even 80% in equity, that is also a good choice. Maybe that in next 1 year, you may experience that market is volatile. But yes, if you're investing for long term, equity is the asset class which has potential to deliver you good returns and help you achieving your financial goals. But if you talk about the short term, suppose you are 30 years old, but you want to invest for next few years, in that case, as you mentioned earlier, multi-asset allocation fund or some aggressive hybrid or balance advantage fund, this kind of funds can be good choice for you. At the same time, Sakshi, I'll suggest one thing to the investors.
Sure.
See, if you have some understanding of equity market, you have been investing for quite some time, you should always make core and satellite portfolio. Core portfolio means the portfolio where you invest in diversified funds, a mix of asset classes for long term. But in short term, if you want to earn good returns from some themes or sectors, in that case, some 20-30% allocation can be in some themes also. Like in the beginning, we were discussing about PSU theme or defense theme,
Right.
which we delivered very good returns. But investors, maybe that they invested later when
Yes.
the theme out. But if you make good decisions at the right time and you invest in those themes, you can definitely outperform the broader market. So this way, first thing, decide your investment horizon, understand your risk appetite, and then you invest in equity and debt, that allocation you decide. But for long term, equity must be in a higher allocation in your portfolio.
Okay, the longer the horizon that you have, the greater the allocation to equities in your portfolio should be. Keep that in your mind. It also plays via your age as well, but in case you have that 20-30 years kind of a horizon, look at the kind of jump that we have already seen in the last 20-30 years in the markets. It only has to grow from here because the economic scenario has changed, the way our Indian economy has opened has changed, the way the growth in the world will be changing. So looking at all this, next 20-30 years could actually give you much more returns that we have seen in the past in the equities. So keep equities as one of your top preferences for the long term horizon. If you have a very short term horizon, then probably Pooja, would you suggest, like for somebody who's only looking for a year's perspective, maybe next festive season? Since we also club festive season with the wedding season. A lot of people would always have this foresight that next year some wedding must be coming in their families. So if they have to prepare today for the next festive season, where should they invest?
Very right question, Sakshi. What happens is many a times whenever we talk to the investors, it's all long-term equity and SIP. But there is something which is on year basis, not only investment or goals, also the expenses. Like if you see the second half of the year is all about expenses, it's all about
Correct.
festivals. You
Correct.
name all the festivals, Ganpati, Navratri, Diwali, New Year's, everything. And whether you are being a part of the festival or you're just being an audience to the festival, there are expenses, whether it is shopping or you're inviting the guest and all of that. So that is one thing. The other thing is travel, which we never consider in the financial planning goal. Is every year there is a travel. Either it is a the domestic travel or an international travel. So that is something you need to plan on year. Then there is
Yes.
something called as a contingency fund, which is very important. Like when we started the discussion about COVID has taught us that there has to have, there has to be a, sizable amount of
Emergency
contingency.
fund. Yeah. Hmm.
Correct. So emergencies has to form the portfolio. So these all things are like 1 year horizon kind of a portfolio, wherein returns are certainly not important. The capital protection is important because you might need the amount every year. So few categories, because the debt taxation is now similar to the fixed deposits or the RDs and stuff. So there is no clear differentiation between the two. So whatever is comfortable, people can go for that. But if you come in a high tax bracket, and if you have a time horizon of more than 3 months, I think arbitrage is a very good category which people can look upon. So arbitrage funds is one thing that I would like to suggest here because it has equity taxation. If you're holding it for 1 year and above, then certainly you're making a good amount of, differentiation in the taxation. And secondly, as I told you, in the debt, whether you opt for debt mutual funds or an RD, but keeping that amount out of sight is very important because if it is lying in your saving account, it will
Yeah.
never be saved because the expenses are such that you can never save that for next year. So you need to
Right.
keep that out of sight. And secondly, it has to be as per your taxation bracket. You need to plan
Okay.
accordingly.
Okay, got it. So, in case you're looking for a shorter term horizon, then arbitrage funds is what you should be looking at rather than an FD or an RD, because arbitrage funds for over 1 year could actually give you much better taxation benefits or saving of taxes than an FD or an RD. So, something like that you should be definitely looking at. Okay, we have come to an end of the show, so we will just take one last word from both of you. Pankaj ji, what else would you want to advise on this Diwali season for all our viewers?
See, always avoid biases in the investment because we have seen whether it's a herd mentality, whether it's a recency bias. Like I will give example of these themes where investor invested at the last moment and then they lost money. So do not have biases, no emotional bias. Always set your financial goals based on your financial goals, based on the investment horizon and your risk appetite. uh, Decide that what kind of allocation should be in a portfolio. Asset allocation and diversification is the most important part of your financial planning.
Okay, Pooja, we'll give you the last word on the show then. Tell us what is the advice that comes from you?
Would just say, Sakshi, that you don't need to have so much of debt in your portfolio. Clear off all the debts. Then don't take so many loans, unnecessary loans. People opt during such festives. So don't get into all that. See, investment more is not important. Amount more is not important. A lesser amount is also okay because if you have a good time horizon, compounding will play its role. So I would say control your risk is something I would want the viewers to, take more, keep more attention or, bring to the attention that please see what risks you are taking in the portfolio or in your entire, wealth. Because in less risk also you can have more returns. So I would say less risk is more return according to me if you have all these things in place.
Okay, wonderful. Well, thank you so much to both of you, Mr. Pankaj Mathpal and Pooja Bhinde, for being with us on this very special edition, guiding all our viewers to really plan well for their finances and for their future this Samvat season. If they haven't done it so far, this is the best time for you to get started on. It's never too late to get control of your finances and put them in the right direction. And I hope this has really helped you out. In case there are feedbacks on what more you would want to hear from top financial experts, then we will definitely keep doing this going forward as well. So write them on the comment section below. And here's wishing all of you a fantastic Diwali ahead. Thank you so much for being with us. All right, and we'll wrap it up on that note. Viewers, thank you so much for being with us. Wish you a very happy Diwali. Hope this has really helped you out. Get insight as to what exactly should you be doing, where should you be investing, how should you be planning for your portfolio this festive season. And we will be continuing to get you more market masters, more financial experts throughout the course of this week and next week as well, to get you the best of market and personal finance voices to help you on your personal finance journey. Thank you so much. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus is on Syngene's Q2 earnings. The company's earnings have come in a decline of top line revenue by about just 2.1% year on year and a profit drop of about 8.9%. But what